Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Paris rapeseed, Winnipeg canola and Malaysian palm oil.
Paris rapeseed. In late June, the market broke up through and closed over a short-term upper wedge trend line, made a fresh onslaught higher, reaching the primary and secondary targets for this small descending, expanding wedge pattern, and rising in early July to make new highs not seen since July 2023, and reaching the congestion seen in September 2012 between 513 and 3/4 to 519 and a half. Once there, well, prices again fell away, but this time only down to a little short of the 2013 high, and as far as the rising mauve highlighted medium moving average, which is currently 476 and a quarter, reaching it 4 weeks ago. We then saw a rise the same week, peaking at the congestion at 504 and 3/4 and just over the neckline of the June to October 2023 head and shoulders top, currently 498 and a half. We have since fallen away. A small bear flag 2 weeks ago, below the mauve medium moving average and under the dark blue highlighted lower bull channel line, currently at 468 and a half of the June to mid-August very wide bull channel. Now, I did say this 2 weeks ago, and I quote, "This, I stress, may not be the final pattern here, but is the pattern that's currently dominant, and the one we have to deal with, and I would thus treat the bull channel as the key current feature, with the neckline acting like a median line, if you will, until something else develops," end of quote. Last week something else did develop, a July-based bearish shift pitchfork, highlighted in bright red on my daily chart. I am not in love with this bearish pitchfork, and I'm quite happy to retire if it becomes troublesome, but for now it shows quite well the bearish angle of attack of this market. Prices today are just above the middle time, currently at 463 even, and just under the dark blue lower bull channel line, the breached and broken one, well, breached, let's say, as well as just under the 2013 high at 464 and well, it was, it's just moved above it, just above the 464 and a quarter, the 2013 high. There is one other feature I would like to highlight, and that is a new pattern that revealed itself last week. It's a late April today head and shoulders top with the same dark blue lower channel line as its neckline. So far it's not revealed whether it is a head and shoulders top or a continuation pattern, so watch the neckline and the action near and around it, though for now I do favour a head and shoulders top action. If that is the case, apart from the bright red middle time, keep an eye on the following below. The 50% Fibonacci line of the May to July 2023 move at 456 and a half, and the 50% absolute Fibonacci line at 445 and a half. The final observation is to do with the moving averages. Since the start of August, prices have roughly been corralled by the overhead medium moving average, currently 476, and below by the gold long moving average, currently 454 and 3/4. It will be interesting to see what happens when they break out of this restriction. Winnipeg canola. There has been and is a lot going on here, as you can easily see. I'll do my best to interpret it. Towards the end of May, the market moved up, breaking through the gold highlighted long moving average, currently at 643.40, but soon after running out of steam on the upside from the effort of doing so. However, in this process, the month of May became a monthly key reversal up, a longer term bullish pattern that initially I suspected might influence the market, if not now then in the future. However, today, I'm not so sure. You see, June did not see any immediate resultant move higher. Instead, prices chose to drop, making lows at the end of the month not seen since the horn bottom of February. The fall was finally stifled by a 2-day pipe bottom made at the end of June, based on the May 2023 low at 611.10, and prices then zigzagged higher throughout July. The initial zig was up to the combination of the gold highlighted long moving average and the June 2021 low at 655.90. The subsequent zag was down again to just over the May 2023 low, and the subsequent zig back up was towards the May highs just over the lesser Fibonacci line at 679 even. The latest zag lower has been extended and has seen prices rip down through all the moving averages, which are personally far too close together for my liking, and down through the 2021 low at 629.5, as well as the continuation of the neckline for the April to June head and shoulders continuation pattern, which is currently at 624. All this toing and froing created a wideish bull channel between late June to late July, which I've highlighted in bright red on my daily chart. However, this bull channel did not last, and I laid out 2 weeks ago the reasons why not, and I quote: "The first and most obvious is the previously mentioned concentration of moving averages, all within a small area specifically. They have not acted as supports, and at most the gold highlighted long moving average has acted as a resistance back at the start of July. Personally, I suspected these moving averages may be more of a nuisance than anything else right now, but we shall see." End of quote. Looking at them last week and this, I do see an interesting constructive move in operation. Early last week, the market formed a bearish bow tie formation of the green short medium moving average currently at 634.5, the mauve medium moving average currently at 642 even, and the gold highlighted long moving average currently at 643.40. The only feature about them that is different is that they have entered the bow tie formation in the wrong order, though they have exited in the right order. Now, part of a bow tie formation is what it does at the beginning, head down in this case, but also some 15 to 20 sessions after formation. There is usually a period of volatility and sometimes a further move in the direction of the bow tie. Thus, watch out for any such action between the 28th of August and the 4th of September. Finally, last week I drew a bearish Andrews pitchfork in dark blue for the late May to late July action. This had been a bit of a preemptive move on my part, but I felt obliged to show this, as this pitchfork is showing the bearish angle of attack, especially where it is now, around the middle time, currently at 593.20. Activity this week has so far shown how supportive the February 2024 low has been, with the market rejecting a move lower beyond this week. Further down, we have the December 2020 low at 567, and then the October 2020 higher, 567, and the October one is at 553. So watch out for those ones just in case. Bursa Malaysia crude palm oil. Back in February this year, we had a key break high over what eventually became the bright red highlighted broken upper tine, currently at 37.85, the August to November 2022 bearish shift pitchfork. Now, I still keep this pitchfork on my daily chart. Why have I done this? Well, looking back, it was because during May, the month hesitated and built a base on this very thoroughly broken upper tine, helped at the time by the 50% Fibonacci line, the May 23 to April 2024 mover, 38.75, as well as then the long moving average currently at 39.27. The move back up started as a counter to the monthly key reversal down we saw in April, creating a small reverse head and shoulders bottom over May, with a neckline extension currently at 39.44. In early July, prices did rise but soon fell away, leaving, if you include the changeover gap, leaving an island top in the first week of July. However, the decline was stymied for a while, but last week, right at the start of the week, we saw prices take a flyer on the downside, down through the mid-May, early August uptrend, which was also a lower bull channel line, currently at 39.20, and is highlighted on my daily chart in dark blue. Prices continued lower, and yes, you've guessed it, down to the same old bright red highlighted upper tine, broken upper tine I should say, mentioned right at the start of this commentary. For last week and the first half of this week, prices were holding close to it. Yesterday, the market made a very interesting combined immediate countering key reversal up and bullish engulfing pattern, quite a feat, and they have since risen as far as the resistance provided, which we're just penetrating, by the overhead 50% Fibonacci line of the May 23 to April 24 move at 38.75. Yet I still have concerns over, even after this significant rally. You see, as I said last week, and I quote, we can look at the whole action now since early April as potentially one large bearish halfway hesitation. If that is the case, then the potential on the downside is well below the current bottom of my daily chart, down in the 34.20 area. Quite a large move. Hence, I have drawn, so this is last week, I've drawn an early April, early July bearish Andrews pitch hook on my chart to try and gauge the bearish angle of attack. End of quote. This week I've highlighted this bearish pitch hook in mobile. Now at the moment the market is between the middle tine below, currently at 36.70, and the overhead upper tine, currently at 39.46. There's one final point, and it is a contrary point in some ways, but a point I've been stressing now for 21 weeks. I gave my thoughts back then on what was going on thus, and I quote, "So what now? Well, for this I went to my standby on such occasions, the longer term monthly charts, and there was one clear standout level that needed to be watched, and that was the November 22 high at 44.08. This is a key level on the top side, because if it is broken, properly broken, then there are very significant potentials topside. Similarly, if it holds in that area, then there are very significant potentials on the downside. So watch to see if prices reach up to the 44.08 area, and then what prices do at that level, and that's the end of the quote. For the moment, I would still consider monitoring this 44.08 level, as it's a longer term play, and the purple upper tine and bright red broken upper tine also for the immediate future."
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Service International Limited. And here comes the final important bit.